In today's video, we're going to cover everything you need to know about guarantor home loans.
We helped Mel and Mike recently. They've just moved into their first home, but it wasn't always the case. When they hit us up a couple of months back, they just moved back from overseas, had been working really hard, but had no deposit, nothing. They were both in really high-paying jobs, and they had parents that were happy to help with a guarantee. They just didn't know how to put it together. So over the last couple of months, we've helped them set up a home loan with the help of their parents with a guarantee, and they're able to borrow the full purchase price plus the stamp duty, meaning they had to put in no deposit to buy their first home. This is called guarantor home loan, which we're going to walk through in this video. We're going to go through the different types of guarantor home loans and how you can get into the market today with no deposit.
Let's start off with the two types of guarantor home loans there are. There's one called a security guarantee and another called an income guarantee. Now, the second one of income guarantee isn't really something you can do anymore. It was a guarantee that used to happen when you couldn't afford the loan. You didn't have the borrowing power. Mum or dad could go on the loan with you and it would boost your borrowing ability. Maybe you could only borrow $500, and when mum and dad went on, your borrowing ability would go to $1 million. What the banks found was mum and dad weren't really helping with the loan repayments, and it really meant that the borrowers that took out those jumbo loans would struggle, and as such, the income guarantee isn't really a thing for first homeowners anymore. This first, which I talked about earlier, which is a security guarantee, is far more common and is the guarantee most commonly understood by a lot of homeowners out there.
The way this works is the bank will give the loan to the couple, to Mel and Mike, for example. They'll give them $1 million home loan towards their purchase of $1 million, for example. In the background, the bank will structure this. They'll secure $800,000 of the home loan against Mel and Mike's property and $200,000 of the home loan against mum and dad's. Mel and Mike are still responsible for the repayments on the full $1 million.
So they need to be able to demonstrate they have the income and affordability to service that $1 million loan. And that's the main difference. With the security guarantee, you're only leveraging the equity in mum or dad's property. Mum or dad are not responsible at all for the ongoing repayments, the ongoing commitment. And the only thing that could happen, which is obviously the most unfortunate thing that can result as a security guarantor, is if Mel and Mike were to stop paying their mortgage, they went in a foreclosure situation, the bank would sell their home first, Mel and Mike's property, and let's say they sold it for $950, that would cover, of the $1 million loan, $950 and leave $50,000 remaining. Then they'd go to the guarantors and say, we're owed 50 grand. In the worst case scenario, the bank actually can sell the parents' property. So something to be aware of, and certainly you want to get legal advice before entering into an in-guarantor situation.
Now, there are different types of security guarantees, so it doesn't just need to be mum and dad's home. You can do their home, which is allowable with some banks if they've got an investment property, and it's also possible to use cash as a security. So I've had some cases where mum and dad have said, you know what, for that reason, I don't want to give you my home. I don't want it to be sold up. I trust you kids are going to pay the property, but I don't want you to take that. But I'm happy to put a $200,000 term deposit in with that bank, and the bank will secure the $200,000 guarantor loan against that deposit. Now, the thing to keep in mind here, and the biggest limitation with guarantor home loans, is that while Mel and Mike, while you have your home loan, that $1 million home loan in existence, mum and dad can't sell their home. They can't get rid of that term deposit because there's implications. Let's walk through that. How do you remove a guarantor when you're ready to do that?
Yeah, definitely. Well, the first thing to remember is the guarantee is in place for 30 years. There's some ways you can remove the guarantee. One is if your property, Mel and Mike's property, increases in value. Once that happens, you can look to refinance that whole loan, get rid of the guarantor, and hopefully you're at an 80% lend or below. The other one that usually happens is the loan gets paid down. When you pay down the loan, you get to a certain point where you'd have enough equity where you can pull across that guarantee and remove it. Typically, we find guarantees are in place for at least 5 years, and that's a time frame you'd want to let your parents know that the guarantee would be in place. If your folks are looking to sell within that time frame, well, there will be implications in this situation where you sell. That second mortgage of $200,000 is secured against the parents' property, and that as such need to either get Mel and Mike to refinance it onto their home loan or pay that off themselves. So there are implications there associated. Jen, walk me through how the guarantee is limited and what a limited guarantee is.
Yeah, so typically the way the banks will structure it now, in that Mel and Mike scenario, is the guarantors aren't on the hook, mum and dad aren't on the hook for the full $1 million. They'll limit your parents' guarantee to what's against the property, the $200,000. There are some banks that put a buffer on there. So they'll say it's $200,000 plus 20%, 220 is what the guarantee is limited to. So I guess the positive thing is at least they're not on the hook for the whole loan, but they still are on the hook nevertheless. Now, there are some alternates to guarantor loans as well. So we've had cases where we've gone through this, we've sat down with parents and said, like, do you realize this is what could happen worst case scenario? And they said, oh no, we're looking at selling in the next few years. I think this isn't for us. So an alternate to this could be potentially a gift if mum and dad are able to help out with that and just say, well, here's $100,000 to help you in. You might have to pay lender's mortgage insurance and get in that way.
Definitely. And one of the neat things we've seen in most recent times is the help of the government guaranteeing first homeowners under the first home guarantee scheme. This scheme allows a lot of people, as long as you have a 5% deposit in the market, without necessarily needing mum or dad to be the guarantors, because the government is your guarantee up to a 95% loan with no mortgage insurance. So we've certainly seen a bit of a shift where once upon a time, a lot of our clients would want the guarantee in that situation. Mum and dad might just say, we'll give you the 5% deposit. You guys get the government as your guarantee, and it keeps them off the hook. Happy days, they don't have to worry about it.
The limitations of that scheme are there are some pretty severe price caps. In Brisbane, it's 700,000, Melbourne 800, Sydney 900. So a lot of people are saying, well, if I want to buy a home to live in with a family, it's not enough. So that's a drawback. And the major drawback of a home, a mum and dad guarantee, is you're limited to the people that can use it. It typically has to be mum and dad or a close relative. There's some cases where they'll allow uncles and aunties, very few, and sometimes siblings, but not as much. The main group that banks will allow is mum and dad. The second limitation, I suppose, is your parents' situation. So some banks will make sure and ensure that your parents are actually still working. They'll want to see their pay slips. They'll want to get your parents' personal situations, their assets and liabilities, to understand that, well, you're not putting mum and dad in a really, really bad situation if something goes wrong with this home loan.
The other thing is mum and dad need to have a bit of equity in their property. If they have a mortgage with, Bank of Queensland or another bank, and you're going with the guarantee at another bank, say ANZ as an example, ANZ will actually liaise with Bank of Queensland to get sort of an approval from your parents' bank to allow the guarantee to be in place. We call this a second mortgage. So effectively, ANZ goes second behind Bank of Queensland. We've also had some instance where mum and dad thought they paid off their property, and during the home loan process, when we're getting close to settlement, mum and dad realized that they had a line of credit facility with their bank for their business. So you've got to be very careful that your parents know their situation well, and that you're not going to get in a position whereby they don't have enough equity. Because if they don't have enough equity, they wouldn't be a suitable guarantee or a candidate. Jaden, when can you use guarantor loans? Can you use it if you've got 3 properties already and you're wanting to build up your investment portfolio, or is it really specifically designed for first homeowners?
The latter. So a lot of banks do limit this for the guarantor home loan process to be if it's your first home. If you've been divorced and you're buying a home to live in and you have no other property assets, but they don't really allow you to use it as a means of building wealth. So if you've got one existing home, you're using it as an investment property, very few banks will allow you to use a guarantor loan as an investment, because they're saying, well, this is meant to be to help you into the property market on the ladder, not build wealth. So keep that in mind. It's pretty much designed for your first home or a home to live in if you don't have any other assets. It's not really made to build a 20 property portfolio.
And look, our preference with the guarantee is always to help mum and dad remove that guarantee as soon as possible. So once your property has enough equity, you've paid down the loan, the key here is to look to refinance, remove the guarantor, get your parents off the hook, discharge them ASAP. Now, this is really tough to know how soon you can do it, because it is reliant on how quickly you can pay down the loan on top of the minimum repayments and how quickly the property increases in value. So once again, if your parents are considering going guarantor, it's always wise for them to get legal advice, understand what they're getting into, and know that the time frame that they're going to be in for the guarantor is really unbeknownst, because it all depends on a number of factors that are outside of your control. Jaden, is there anything else that buyers out there should be aware if they're wanting to get in the market with a guarantor home loan?
Yeah, we have a bunch of resources on removing the guarantor, and this is always a good place. And we try and start there actually and say, well, what happens if you need to refinance in a year's time? Mum and dad want to sell their home and you have to pay lenders mortgage insurance. What does that look like? Let's run through that scenario. What happens if there's issues domestically, if you have to separate? Does that work? It's worth having these conversations up front. It's not always the nicest thing to say, but at least everyone's on the same page, because at the end of the day, it's not just you and your partner buying, it's not just you buying, it's you buying with the help of your parents, and you're sort of attached for the next 30 years, like you said, by default. So it's worth having that conversation, and definitely in all cases, we really recommend getting legal advice if you are looking at going down this path.
Guys, here at Hunter Galloway, we're mortgage brokers that deal with people across Australia. And if you're looking to get a guarantor home loan, we specialize in this and definitely can help. Call us on 1300 088 065 or visit our website, huntergalloway.com.au. Guys, until next time, thanks so much for your time. Have a great day.